Hailed by fans as a market-disrupting liberation, and demonized by critics as a dangerous, volatile creation, Bitcoin and other cryptocurrencies are never out of the headlines for long. On December 16, 2020, the price of Bitcoin hit $20,000 for the first time. On January 3, 2021, its value soared above $34,000, meaning the cryptocurrency had gained almost $5,000 in the first few days of 2021. Then on February 9, 2021, its value briefly hit a new record high of $48,000 after electric car maker Tesla revealed that it had bought $1.5 billion of the cryptocurrency and pledged to start accepting it as payment for vehicles. Experts believe recent jumps in the price has been due to a wave of money from both institutional and private investors, spurred on by the coronavirus pandemic. There's a certain amount of mystery around cryptocurrency. Satoshi Nakamoto is the pseudonym used by the presumed person or people who developed Bitcoin, created and deployed Bitcoin's original implementation software and conceived the first blockchain database. What is Bitcoin and how does it work? The concept of digital monies such as Bitcoin that people send online is not that complicated in itself. After all, transferring money from one online bank account to another is doing exactly that. Cryptocurrencies use blockchain technology, a way of sending data in cyberspace, to do this. But, different from normal currencies like dollars and pounds, cryptocurrencies are decentralized, which means they are not regulated by a financial authority, like a government or central banks. This brings some advantages. Cryptocurrencies are global, meaning they have the same value in every country. This feature makes them much easier to transfer from person to person across the globe, without the headache of exchange rates. The big disadvantage of digital assets such as Bitcoin and the like is that they are shockingly volatile, and there have been reports that people have had to wait to get their cash out because of technical snarl-ups. Which are the three biggest cryptocurrencies? Bitcoin, the best known and first major cryptocurrency, launched in 2009 and remains the market leader. Its market capitalization, effectively its total worth, is $862 billion, as at February 9. Ethereum and Tether come in second and third, with respective market caps of $200 billion and $29 billion, as at February 9. Since 2009, a wide range of challenger cryptocurrencies, dubbed altcoins, have arrived on the scene. How has the Bitcoin price performed? The Bitcoin price has climbed steadily since September 2020, fueled by demand from investors and also news that PayPal will allow U.S. customers to buy and sell the cryptocurrency within its app next year, and Tesla pledging to start accepting it as payment for its vehicles. One Bitcoin currently costs $46,599, as at February 9. However, the cryptocurrency has made steady gains before, such as at the end of 2017 before collapsing in 2018, see graph below, which was produced in January 2020. In 2018, MPs called cryptocurrencies a «Wild West industry». Extreme volatility is perhaps the most defining factor of the cryptocurrency market. To put Bitcoin prices into investment profit and loss terminology, if you had invested at the start of 2020, you would be sitting on a 300% profit by the end of the year. However, if you'd invested at the start of 2018 and sold at the end of the year on New Year's Eve, you would have lost 73% of your money as the Bitcoin price collapsed. If you wonder what market forces drive these prices up and down so wildly, you are not alone. While generally speaking the value of these currencies is, like anything else, linked to supply and demand plus the number of competitors, it is often difficult to determine what exact factors influence this erratic performance. This makes digital currency all the more risky to invest in. What are the new cryptocurrencies to watch? New, smaller cryptocurrencies include Litecoin, Bitcoin Cash and EOS. It might be tempting to invest in crypto newcomers, but you should exercise caution. Smaller altcoins are even more volatile than Bitcoin. If anything, they are really just speculative investments. If you are tempted, experts say you should only invest a small amount of your money, 5% or less. How risky is investing in cryptocurrencies? If you want to invest in crypto, ponder first whether you would buy a house in Rapid City, South Dakota. This city in the United States has just over 75,000 inhabitants and is reportedly one of the places with the most unpredictable weather on Earth, where snow blizzards and summery thunderstorms occur without warning, before everything calms down again and temperatures rise dramatically the very next day. The weather of Rapid City is an apt metaphor to describe the behavior of Bitcoin and Co. It can be totally bonkers. Rapid City in America has some of the craziest weather in the world, a bit like how volatile crypto prices can be. If you do invest, be prepared to lose some or all of your money. Crypto is not conventional investing. In 2018, MPs called cryptocurrencies a «Wild West industry». They are also not regulated by the UK watchdog, adding another layer of risk. From January 6, 2021, the Financial Conduct Authority will ban the sale of complex derivatives that speculate on cryptocurrency movements. Firms will be prohibited from offering retail customers contracts for difference, spread bet options, futures, and exchange traded notes that focus on digital currencies. Bank of England Governor Andrew Bailey recently said he was very nervous about people using Bitcoin for payments. He has previously warned that cryptocurrency investors should be prepared to lose all their money. Is Bitcoin a good investment? Bitcoin is at the very high-risk end of the investment spectrum. The price of cryptocurrencies is volatile, some can go bust, others could be scams, and occasionally one may increase in value and produce a return for investors. As Danny Cox, from the financial services company Hargreaves Lansdown, puts it, cryptocurrencies could remain niche, become mainstream, vanish without trace or anything in between, and any investment should be considered as very high risk. As with any investment, do your due diligence and don't pin all your hopes on one company or one cryptocurrency. Spread your money around so you spread the risk. Sign up to our newsletter. Receive regular articles and guides from our experts to help you make smarter financial decisions. Is there a less risky way of investing in crypto? Stablecoins could be a less risky way of investing in cryptocurrency, according to Gavin Brown, Associate Professor in Financial Technology at the University of Liverpool. Stablecoins continue to develop and be the potential solution to the problems of volatility and credibility for cryptoassets. In contrast to cryptos, stablecoins have actual assets behind them, like regular currencies, he says. DAI and TUSD are two of them, which are both backed with the US dollar. One coin is worth $1. DAI is hosted on the Maker (MKR) platform, and crypto platforms can also be safer to invest in than the actual currency, he says. Risk is therefore low, but gains are very low or nil too. Brown points to Tether, the largest stablecoin, backed by $1 per coin. Tether bounced back during the pandemic's first lockdown, not only maintained its position as the largest stablecoin but more than doubled its market value, from $4.6 billion to $9.2 billion. It is now worth $22 billion, as at January 4. It shows volatility has gone down. He adds that potential investors shouldn't necessarily see Tether as the next big thing. In theory it won't ever be worth more than $1. But it's potentially an interesting option for any varied portfolio to include Tether. It could be a slice of stability if other things start to suffer. According to Brown, it could also be less risky to make long-term investments in the companies associated with cryptocurrencies. For example, shares in Facebook, which is planning to launch a currency called Diem, formerly Libra, JP Morgan, which has the digital JPM coin that is equal in value to the US dollar, and the bank Wells Fargo, which is developing a US dollar-linked stablecoin. There are also some funds and investment trusts that have exposure to cryptocurrencies, which is a less risky way of investing than buying the currencies themselves. How to buy Bitcoin? Where can I buy cryptocurrencies? Coinbase and Binance are two of the world's largest Bitcoin trading platforms. They are touted as the easy and fast way for new users to purchase various cryptocurrencies such as Bitcoin. Other ways to buy include the digital currency app Ziglu and on the investment platform eToro. Gemini, founded by the Winklevoss brothers of Facebook fame, is a digital exchange that allows customers to buy, sell and store cryptocurrencies. It was recently awarded an operational license by the Financial Conduct Authority, and is regulated by the New York State Department of Financial Services. What are the fees? If you want to buy Bitcoin and other cryptos, and sell them again, there'll be several fees, such as transaction fees, deposit fees, withdrawal fees, trading fees and escrow fees of usually a few % of the total transaction value. What about a Bitcoin fund? Several companies are planning to launch Bitcoin funds, though have run into difficulties with regulatory agencies so far. The main purpose of it would be to facilitate the investing process into cryptocurrency and make the asset class more attractive. It will still be volatile, but it could be easier to sell your investment and get your money back than investing directly. There are a few ways to get exposure to cryptocurrency with existing investment funds. For example, Ruffer Investment Company, an investment trust, announced in December 2020 that it had allocated 2.5% of its portfolio to Bitcoin.